Welcome back to Uncovering Real Estate, brought to you by the Brampton Real Estate Board. Hope you got that snack. I'm your host, Sarabjit Rana. And if you just joined us, I've got in studio with me Peter Puzzo, who is a mortgage broker with Dominion Lending Centers, having a really good chat with you, I have to say, because I want to represent the layman, right? I mean, yeah, we buy a home. We sometimes take this process for granted, Peter. Yeah, you're going to buy a home. Yeah, but what about all the things it takes to get to buying the home? All the steps involved. It is anxiety increasing.
Yes.
Right?
It's a big deal.
It is
It's a big deal.
We were just talking prior to the break about how you want to make the steps as seamless as possible. And I have to say, hats off to you if that's the way you operate, which I'm certain that you do, because one doesn't realize that just after you get approved for a mortgage and everything that it ends there. No, it doesn't end. It doesn't end until you're done at the lawyer's office, until you get the keys.
Right.
So tell me a little bit about what we were initially talking about in terms of the steps. You're going to make it okay.
Yeah, so that's the one thing that we really tell our clients is, you know, the first-time buyer specifically, that everything's going to be fine. But even for all our clients in general, I think it's important, not only in the broker channel, but at the branch level, at all levels, that things go smoothly. That, you know, the consumer is, again, very intimidated by the process. So if they walk into their lawyer's office and the lawyer is missing a document, the consumer doesn't know what that means or the relevance of it. So in our brokerage, we make an effort, a concerted effort, to have constant dialogue with the law office to make sure that they have mortgage instructions, they have everything that they need, you know, that there's not going to be any hiccups, because we really want our clients to go in, sign, and at the end of it all say, wow, that was easier than I thought it would be.
Yeah, and that's really important, because if the experience isn't the way you want it to, it could cause enough stress and anxiety to hinder you the very next time you go ahead and do that, or when it comes to making a choice the next time and how you do carry out the process.
100%. And fortunately for us, we have, you know, valued members at the Brampton Real Estate Board that support our service. Yeah. So the last thing that I would want is for my client to go back to the real estate agent and say, hey, things didn't go as well as they were supposed to. You know, Peter didn't do his job, or whatever the case may be. So we have our circle of friends, the Brampton Real Estate Board member, myself, the lawyer. We all work together to make sure that things are seamless for the client.
That's a really important point. Now with let's be honest, as many choices as there are out there, you've got to make it easy for the buyer. It's got to be an easy financial process in terms of what they bring to the table, you know, get approved and everything, and a mental process has to be very, very important. Now, let's talk about the minimum required down payment. So, you know, we often hear, oh yeah, you know, if you've got 5%, you're good to go, don't worry about it, it's all fine. But that isn't always the case, right? It's not always 5%.
Well, not always.
Okay.
Technically speaking, we have two types of mortgages. We have mortgages that are what we call insured, meaning the borrower is putting less than 20% down. Okay. And we have conventional mortgages whereby the client is putting 20% down or more. Okay. The two are treated quite differently. To answer your question, the minimum down payment for any Canadian, provided that they have confirmable income and satisfactory credit, is 5%. Okay. Now, they do have to buy within their means. So we have, you know, you cannot purchase a home with more than a specific percentage of your gross income being allocated to the mortgage. Okay. So there are guidelines in place to protect the consumer. You know, the last thing we want is a consumer to buy a home that is more than what they can afford. Yeah,
that they can't manage.
No, we don't want that. Nobody wants that. No. So there's guidelines in place. But to answer your question, 5% down is the minimum. And there's this misconception sometimes that it only applies to first-time buyers. That is not the case. Okay. So you can buy your second, third, fourth home, provided that it's being owner-occupied, with a minimum of 5% down. Okay.
So, okay. And that brings me to the point that I mentioned before. Knowledge is a dangerous thing. You hear a lot of things, you go to parties, you listen to the social network, and they're like, oh no, you can't do that. You can only do this, and you can only do that. Yeah. That's why it's really important to get your information from a valuable, knowledgeable source, whoever that may be. Correct. Right? Let's be honest.
100%.
But know that it is to be true.
Yes. There's quite often times where a client will call me and say, well, my coworker told me this, or my brother told me that.
Listen, my aunt's niece's brother-in-law's nephew said to me, what are you doing? Right. And we've all had it. It's happened to us. Someone said something, and then you walk in with the presumption, you know, and you're in actually a bit of trouble because you've actually sort of taken your steps to act out in a certain manner.
Right, you're already going down the wrong road.
100%.
Yeah.
100%. It's very, very important. So let's talk about the big daddy of all the mortgage gods, CMHC.
Yes.
Right?
God bless them.
God bless them all. So the Canadian Mortgage Housing Corporation.
Correct.
Correct acronym?
Yes.
Okay.
Yes.
So what is their role in mortgage financing?
So whenever somebody is buying a home with less than 20% down,
Okay.
the mortgage must be insured by one of 3 institutions. CMHC is one of them.
Okay.
Now, the government, in their defense, they're not in favor of monopolies. So there's 3 providers of this service. There's
Okay.
CMHC.
Yeah.
There's Genworth Financial, which is affiliated with GE Capital,
Okay.
and there is Canada Guarantee.
Okay.
So they are the 3 insurers.
Okay.
So what happens is Mr. Smith wants to buy a home with 5% down.
Yeah.
We'll use CMHC because it's the most
Well
familiar
known.
name.
Yeah, yeah,
Correct.
yeah, yeah.
So you walk into either your branch or your broker's office to get a mortgage, and the mortgage gets placed with a specific lender.
Yeah.
The lender says, yep, you're approved, but there's one more step. We need to get approval from CMHC.
Okay.
So CMHC basically says to the bank, yes, Mr. Lender, provided you've followed the appropriate steps and guidelines,
Yeah.
we will insure this mortgage.
Okay.
The insurance is a one-time fee that is added to the mortgage
Okay.
that is paid by the consumer.
Okay.
And it's a percentage of your down payment. So for example,
Yeah.
if you're putting 5% down,
Yeah.
but less than 10% down, the CMHC premium is 3.6% of your loan amount.
Okay.
Okay? So that number is added to the mortgage. It's not an out-of-pocket expense. It's
Okay.
added to the mortgage. But what CMHC basically does in a nutshell is it allows banks or financial institutions to provide mortgages to Canadians that don't have the 20% threshold to put down. So they serve a huge purpose.
You've explained that very eloquently because, you know, even though you've been through that process, you still think, what does this mean? And it doesn't usually get explained to you, quite honestly, while you're going through the process.
Right.
Because you really don't care. You're like, okay, just give it to me now. I want to be approved. I want to be
Right,
done.
right.
So we've got about, I'd say 20 seconds left. So I've had a really interesting conversation. You've provided some great insight. Any last minute sort of information that you'd like to share with our viewers in terms of?
Just put yourself in a position where you can make an informed decision.
Okay.
So go see a local mortgage broker, go to your specific bank, speak to both parties, see who you feel more comfortable with, and put yourself in a good position.
I think that's the most important thing. Thank you so much, Peter, for
My
coming in
pleasure.
today.
Thanks
Really
for having
appreciate
me.
it very much.
My pleasure.
Thank you so much for watching Uncovering Real Estate, brought to you by the Brampton Real Estate Board. Until next time, bye-bye.